Now, I'm excited and honored to be here with each and every one of you here today because I'm here today to help you discover simple ways to increase your Forex profit potential starting right now. In fact, what I'm going to be teaching you today is referred to as what is called the London Breakout strategy. I'm going to show you today how you can utilize trade setups during the London trading session in the Forex market. I'm also going to show you today how you can also look over the shoulder of a professional analyst. I'm going to show you how you can actually mimic the Forex experts' trading plans. Now, everything I'll be sharing with you here today, I've actually learned through this education. In fact, the London Breakout strategy is only one of the strategies we teach in what's called our live market trading club. I'll get to that later. Now, before we begin, I do want to let everybody know that trading does have its own form of risk involved, and you should never invest money that you cannot personally afford to lose. You should always trade with proper equity management in mind. Now, there is no such thing as an undefeated season when you're trading, and you may incur losses from time to time, but the key is to keep your profits high and to have minimal losses as you're going along. Now, it is also highly recommended that you go through this education, you learn this strategy in its entirety, and you begin trading as an educated and knowledgeable trader. Now, also please be advised that anything I'm going to share with you here today, we're going to go into the live market here in about 2 minutes. I'm actually going to walk you through a trading strategy to show you some examples here, but ultimately when it does come time for you to trade live, you decide to make a specific trade, well, that decision to make that specific trade, well, that is yours and yours alone. So as Reed already gave me a little bit of an introduction, let me go ahead and formally introduce myself to those of you that may have jumped in here a little bit late. As I mentioned, my name is William Gallagher. I am one of the financial analysts and Forex specialists at Market Traders Institute. I have been involved in trading in the investment market since 1998, mostly in the stock market. Only recently, in the last 2 years, I've gotten involved with the Forex market. That is because of Market Traders Institute and their education. Also worked for several financial companies and firms, and I also did help start and launch an entirely new financial services company from the ground floor up. And what this has done, this has given me a general knowledge of what goes on behind the scenes in the financial world. And one of the things I want to go ahead and point out is that even though I do have a financial background and I did know about the Forex market, I didn't understand the potential of the Forex market until going through the education, the program that MTI provides. So as I mentioned, I am a student at Market Traders Institute. Like many of you here in the room today, I attended one of these webinars. I started wondering if this is something that I could do, if the Forex market is something I'd be able to generate a source of income from it. So like many of you here in the room today, you might be scratching your head wondering if this is something you can do. Well, if you say this is something you can do and you want to learn how to do this, well, we here at Market Traders Institute, we're here to teach you. We're here to take you by the hand and step-by-step teach you and show you how to trade the Forex market. So before we jump into the charts, let me go ahead and introduce you to who Market Traders Institute is. MTI, it stands for Market Traders Institute. We were founded in April of 1994. Actually just celebrated our 21st anniversary this past April, and we're located in Lake Mary, Florida. For those of you who are not familiar with the Central Florida area, that's about 20 minutes north of Orlando, Florida, the home of Walt Disney World. We're about 30 to 40 minutes north of Walt Disney World. The building you see on your screen right here, that is actually our building. I'm actually broadcasting out of that building here today. And the neat thing about this is that you can actually come to our building. You can meet us in person. You can get trained live in person. In fact, over the last 21 years, Market Traders Institute, we've trained over 30,000 students on how to trade this market. We'd love for you to enroll into our program. We'd love for you to become another one of our success stories. Now, without going too much further here, Market Traders Institute, we were nominated for one of Trader Planet's 2014's Best Trading Education Awards. Florida Trend Magazine voted us as one of the best companies to work for, not only in 2015, but in 2014 last year as well. More importantly, those of you might recognize this circle right here, Inc. 5000. Something we're very proud of. We just received a letter a couple weeks ago. MTI was ranked 1,180 out of Inc. 5000's 2015's fastest growing companies. We just received the magazine, received the letter last week. So I'm going to show you today how MTI has been able to achieve this growth, how we've been able to achieve being ranked on Inc. 5000's fastest growing companies here today. Now, not only does MTI have some of the best trading strategies, we also have some of the best instructors. One of the best Forex instructors here, maybe you may have heard him before, his name is Joshua Martinez. Joshua Martinez, he is one of our product knowledge experts here, and he is one of our Forex masterminds here. Give you a little bit more about Joshua Martinez's background. As I mentioned, he is one of our product experts. He's trained thousands of Forex investors around the world. He took an initial deposit investment of $500, generated over $39,000 in profit from it. He's made thousands of Forex investments. He's a published author, international speaker, professional analyst, and he is a full-time trader. Now, I know many of you might be wondering, well, William, why are you telling us all this? Well, because Joshua is the gentleman who has created the strategy that I'm going to be sharing with you here today. Now, the strategy's allowed him to do some unbelievable things in the Forex market. Now, let me pull up his trading account here. You can see here this is third-party verified, and you can see here he has gained over 4,500% in this trading account. More importantly, the reason I want to bring this up, if you look at the graph at the bottom here, when he first started trading, once again made an additional deposit investment of $500, and when he first started trading, he was winning some, he was losing some, winning some, losing some. In fact, many of you might be able to relate to this. I know when I first started trading, I had a yo-yo account like this. I would win some, I would lose some. So Joshua here, he was maybe making $2, losing $2, making $4, losing $3, that sort of thing. But then if everybody looks right here, this is where things started to take off. This is what we refer to as what's called a tipping point. Now, what I'm going to be doing today is I'm actually going to show you the strategy that's allowed Joshua to find this tipping point. It's also going to assist you in finding your tipping point faster and generating profits in this market faster. So, to give you an idea of the type of results that Josh Martinez is able to achieve. And he's had some days where he's made $4,000 in one day. He's made $5,000, $8,000 in a day. In fact, with the same strategy I'm about to show you, he was able to actually generate $10,000 in profit in 30 minutes with this same strategy. So the reason I'm talking about Josh Martinez is because he is one of the instructors who's actually going to be teaching you when you enroll into what's called our Live Market Forex Mentorship and Trading Club program. This is the opportunity to actually trade live with a live professional analyst. I want to bring this up right now because the next live market analysis session is going to be happening tomorrow morning. Tomorrow morning, Thursday morning. Those of you that enroll into our trading club program, you actually get to trade live with Joshua tomorrow morning. Now, I also pull up our charts here. I do want to let you know that this is very affordable. I want to go ahead and take that off now. We have some of our traders, some of our students for a one-on-one session. $4,000, $10,000. We're going to make this very affordable for everybody. It's only going to cost you $27 for the first 30 days with a full match. I just want to go ahead and take that off the table. So those of you who love to be able to learn from a live professional instructor, I'm going to guide you when you actually enrolled into this club. So what I'm going to do right now, about 40 minutes or so, 30 minutes. Let's go ahead, let's jump into the type in the letter Y, type in the word yes when you do in fact see the trade. So now into the charts and I'm explaining to you this trading strategy. James, Jonathan, Paul, Ray, great. I appreciate everybody responding here. Once again, I apologize that I'm be going fast to go over, but I assure you, when you enroll into that trading club, you have a live mission walking you by the hand, going over this in much greater detail. So, and before I begin, do I have anybody that is brand new to the Forex market? Brand Forex market, type in me, type in new. I don't want to spend a lot of time explaining what the Forex is if everybody already knows what it is. Yeah, so Joan, Tony. Okay, a lot of you are brand new. So before we strategy here, let me just walk you through, explain to you what we do in the Forex market. In front of you here, this is our charting software. I actually see some of you saying, where did I get this charting software? This is the software that we provide to our students here, what's called our Ultimate Traders Package. This trading software is phenomenal. Those of you out here, maybe you've used MetaTrader, NinjaTrader, some of those, a lot of neat features about charting software. And if you're interested in getting this charting software, I'll explain to you how here, but what you're looking at right here, what we do in the Forex market, we trade one country's currency against another. In the upper left-hand corner of my screen up here, right, you can see that this is the Great British Pound, excuse me, Pound Australian Dollar, GBP AUD. So in essence, what we're doing on this chart is the British Pound versus the Australian Dollar in an attempt to figure out which one's going to gain in value against the other. So let me come in here, let me delete that here. And As you can see here in the Forex market, like with many other markets, the market moves in waves. You can see here that the market has pulled back, it's rallied up, it's pulled back, it's rallied up, it's moving in these wave movements. Now these wave movements are what helps to make this market very easy to predict. And we're going to teach you several different strategies of how to predict this using these wave movements. But what I'm going to do right now is before we actually move forward, let me just go ahead and let me zoom in here. I'm going to zoom in here nice and tight on these little rectangles. These little rectangles you see on your screen. These are what are called Japanese candlesticks. What you're looking at right now, this is referred to as what is called a candlestick chart. So for those of you who are brand new, let me just quickly explain to you what a candlestick is, a Japanese candlestick. It is a visual representation of how much the market has moved in whatever time frame you select on your chart. So if you go back up here to the upper left-hand corner of my screen once again, right here, you can see this says 1 day. So what that means is that each one of these candlesticks, it represents what the market has done in 1 day of time frame. Now, you can set this to whatever time frame you would like to view. In fact, today we're going to be using a 1 hour time frame. But for my example, I'll just leave this on 1 day here. Once again, each one of these candlesticks represents 1 day of time frame. And let me just quickly explain to you what these represent. A white candlestick is called a bullish candlestick. And all that simply means is that the market has gone up and closed up during that day of time frame. Dark blue candlestick, it means the market has gone down. It means during that day of time frame, the market has gone down, it is closed down. So for those of you who are taking notes, all you really need to know, white means the market's going up, dark blue means that the market is going down. Now these candlesticks, they're going to form what are called candlestick formations. And these are the sign language of the market. I'm going to circle a couple of these. Right there, and right there. They tell the trader a story. Now, I don't have a lot of time to discuss these here, but if everybody can see here, the market, it pulled back, formed this candlestick formation. It's called an engulfing bullish candlestick. Sign language of the market. This is saying, hey, William, look for this market to U-turn and go upward in a bullish movement. And just like that, the market pulled back, U-turn, went up, pulled back, formed another engulfing bullish candlestick, U-turn, went up, pulled back, Morningstar candlestick formation, and so on. Here's what's called a piercing line. Now, as a student of Market Traders Institute, we're going to teach you how to identify these candlestick formations. And I promise you, you will become a subject matter expert on them. Now, before we actually go into the strategy here, let me explain to you one other thing. Is that this market moves in these waves, and moves in these smaller wave movements as the market's going up and down along these general ways. And we're going to teach you different strategies such as using Fibonacci's, trend lines, counter trend line breaks, support and resistance. We're going to teach you a plethora of strategies when you become a student here. But I want to explain to everybody, like in other markets, you can make money in this market when the market's going up. You would buy low and sell high. And when the market is going down, it's called shorting the market. I know many of you, you might be scratching your head. You might be saying, William, well, how does that happen? Essentially, what you're doing is you're selling your position first, and you're exiting by buying out later at a lower price. Now, once again, we'll take you by the hand. We'll explain to you how this actually works. I assure you that. Now, one other thing before we go into this market, as I pull my charts, let me delete all this here. And one of the things I want to point out, some of the biggest key reasons to trade the Forex market. One, because there's a great deal of volume in this market. There's $5 trillion daily traded in the Forex market. So to give you a little bit of comparison here, I believe if you were to take the full U.S. stock market, a full month's worth of stock market, it comes out to, I think, less than what the Forex market does in 1 day. That makes this market very liquid, very easy to get in and out of trades. Just want to go ahead and point that out. Now, one of the things I also want to point out here is what we're trying to do in this market is capture what are called PIPs. Now, PIP, it is an acronym. It stands for Price Interest Point. Yeah, Dominic saying, should I be writing this down? Yeah, if you're brand new to this, you should probably write this down. Price Interest Point. So for those of you who are brand new, let me just quickly break this down, explain this to you in the simplest terms of how this works. If everybody is familiar that there are 100 pennies, 100 cents in a US dollar, $1 US. Just like that. I know that's not really anything groundbreaking or anything. Most of you probably understand that. So what that means is that a penny, 1 penny, it equals 1 1/100th of a US dollar. Once again, probably 95% of you, if not 100% of you, understand that. For those of you who are international, I just want to explain there's 100 pennies, 100 US dollars, and that a penny represents 1/100th of a dollar. Now, if you can imagine that we're looking for a unit of measure that is smaller than a penny, it would be the equivalent to what's called a pip. Now, just as there are 100 pennies, 100 cents in a US dollar, there are 100 pips in one US penny. A US penny is 0.01, just like that. So essentially what that means is that a pip, it equals 1/100th of a penny. Just like that. So does everybody understand that? Just going to type in a Y, type in a yes, if you do in fact understand that. Because what we're doing is we're kind of laying the foundation for the actual live market. For those of you who are brand new, great. Yeah, a lot of you are saying yes. So let me just go ahead and before we jump into the charts here, let me explain to you here where this current live market is 2.1852. 2.1852. And I'm getting that from right over here. I'm just coming up with this number here. Now, a penny is represented by the second decimal point. A pip, the pip is represented by the fourth decimal point. Once again, it's 1/100th of a penny, just like that. Now, the only difference is that if we're talking about a Japanese yen currency pair, if we come across any of those, I'll be sure to explain that here. So now everybody has a general knowledge of how the market works. Let's go ahead, let's jump into what is called the London breakout strategy. So I'm going to go ahead and I'm going to pull up my charts here. And I'm going to actually pull up right now the 6 different currency pairs that we're going to be using for the London breakout strategy. Now, I got ahead, I pulled these up here, and they're probably still loading maybe on some of your screens here. I'm going to go ahead, move this up here just like that. Oop, this one didn't come down. There we go. I'll make that nice and center here. So let me go ahead, let me read all these off here. Right here in the upper left-hand corner, you have the Great British Pound, Australian Dollar, GBP, AUD. Yeah, Frank's saying, should I be writing these down? Yeah, if you might want to go ahead and do a screenshot of this or write this down. The Great British Pound, Australian Dollar, Great British Pound, Canadian Dollar, the Great British Pound, New Zealand Dollar, the Great British Pound, Japanese Yen, Great British Pound, US Dollar, Great British Pound, Swiss Franc. Now, right off the bat, probably many of you already can recognize that all 6 of these are based off of the Great British Pound currency. And they're Great British Pound currency pairs, they're pound crosses here. Another thing, as I pointed out here, each one of these charts here, we're going to be using a 1-hour time frame. That means each one of the candles on here are going to represent 1 hour of what the market has done here. And Jack is saying, can we use this on other currency pairs? Jack, we teach our students here how to do it on these 6. You could try using this on different currency pairs. In fact, I have my own personal trading strategy. I do something very similar on other currency pairs. But what I'm teaching you right now, in fact, let me go ahead and let me pull this up here. Let me pull this up here. And what I'm teaching you right now, this is called the London breakout strategy. So what I'm teaching you is going to be used off of those 6 Great British Pound currency pairs on a 1-hour time frame. So let me go ahead and explain to you how this actually is going to work here. We're going to be, oops, sorry about that. Let me see here. There we go. Now what we're going to be looking for, yeah, you might want to go ahead. Yeah, Jimmy's saying should I be taking notes. Yeah, this is where you might want to be taking notes here. What we're going to be looking for in this market between 2 o'clock a.m. Eastern Time and 5 o'clock a.m. Eastern Time, oops, we're going to be looking for the market to form either its high or its low for the morning. We're going to be starting off looking for this starting point right here. Now, the reason for this is that there are 3 major trading sessions that happen in the Forex market. You have the Asian trading session, you have the London trading session, and you have the US, the New York trading session. So what you're happening right here is you're having the close. The Asian trading session is wrapping up, and you have the beginning of the London trading session. So we're going to be looking for the market to either pull back and form a low and rally up, or to rally up, form a high, and pull back between 2 a.m. and 5 a.m. That's the first step. Second step is once we find that directional movement, we're going to be looking for the market to form its opposite high or low for the day between 8 o'clock a.m. Eastern Time and 2 o'clock p.m. Eastern Time. Now the reason for this is because you have the close. You have the close of the London trading session and you have the beginning of the U.S. trading session. So this is our strategy. What we have found is that generally the markets will form its high or low between 2 a.m. Eastern Time and 5 a.m. Eastern Time, and its opposite high or low between 8 a.m. and 2 p.m. Now to go back to that question of why we're using these 6 currency pairs, it's because we have found that each of these 6 currency pairs has what's called the average daily trading range. An average daily trading range, meaning that each one of these currency pairs, we're going to be looking for them to move a minimum of 50 pips in one direction, and it's going to be going as high as over 200 pips. Meaning that we're looking for each one of these currency pairs, they have a daily trading range generally of a minimum of 50 pips. Sometimes they go over 200. So what we're going to be looking for here is for when the market forms its high or low. I'm going to show you the strategy of how we're going to help predict this high or low. We're going to be looking for this market to move a minimum of 50 pips in one direction. So we're going to be looking to get on at least first base, going after a minimum of 50 pips off of each one of these currency pairs. Now, to get that type of idea of what type of profit we're going to be looking for here, in this market we trade in units. This is because of leverage. And this leverage, we trade in these units. We have what are called micro lots. Now, a micro lot, that is generally about a $20 investment per trade. Each pip that you capture with a micro lot position is going to be worth 10 cents. Now, if you go back to our example here, if we're going after a minimum of 50 pips per currency pair per day, that means we're going to be looking to generate a profit of about $5 per currency pair per day. Now, not the largest win, but I know many of you, you might be starting off with a smaller account size, and there's nothing wrong with that. Now, a lot of you might start off trading with what's called a mini lot. A mini lot is generally about a $200 investment per trade. Your broker borrows this investment size. It allows you to place the trade and to generate the pips. Now, each pip with a mini lot position, it's going to be worth $1. So if you go back to our original example here of 50 pips per currency pair per day, now we're looking at going after about $50 of profit per currency pair per day. Not too bad. Now we're starting to get a little bit more interesting here. Now, there's also called standard lots. A standard lot, that is the standard by which most traders strive to achieve in this market. A standard lot is about a $2,000 investment per trade. Each pip that you capture with a standard lot position is going to be worth about $10 now. So if you go back to our original example here of 50 pips per currency pair per day that we're going after here, you have a potential of $500 of profit per currency pair per day. Now, for those of you wondering about what type of account size you might be trading with, especially when you're starting off here, generally if you have less than $5,000 in your trading account, you're probably going to be trading a micro lot or a mini lot, at least starting off until you build your account up. If you have more than 5,000, a lot of brokers will allow you to trade with what's called a standard lot. Now, one of the neat things about Market Traders Institute, we're actually going to show you, we have strategies to show you how to go from a micro lot to a mini lot, and then from a mini lot to a standard lot. So ultimately, the standard lot is the ultimate goal here. So I'll be using that for our example here as we're going along. So let's go ahead now back into our charts. And as we explained before here, we're going to be looking for in this market. And what I'm pulling up here is the Great British Pound Swiss franc currency pair. I'm going to demonstrate this for you on this currency pair here. Let me pull this back just a little bit here. So what we're going to be looking for is the market to form either its high or low between 2 a.m. and 5 a.m. Eastern time here. So I've gone ahead in here and I've already pinpointed these here. And you can see here on this one right here between this time period, in fact, actually what I'm going to explain to you here, we're going to be basing the strategy off of the 3 o'clock a.m. Eastern Time candle. And I'll get to that here in just a second. We'll be basing this off of the 3 o'clock a.m. candle. And I know some of you might be saying, well, what is this in my time zone? Well, in the live trading club, you'll be able to have the live professional analyst walk you through this and explain to you here. But if you look right here, I'm going to pull up my measuring tool here. Between that movement right there, that was 116 pips of directional movement right there. So let me type that out of here. So plus 100 and, oops, there we go, plus 116 pips right there. There's that directional movement right there. Now here's the next day. We have the directional movement. That was a total directional movement of 115 pips. So plus 115 pips right there. We got this one right here. Let's bring this down. Oops, sorry about that. Take out my measuring tool here. And this one, we had directional movement of 109 pips. So plus 109 pips right there. So does everybody see this? Does everybody see this directional movement? Why are we going to be looking for this higher low to form between this time and basing it off of the 3 a.m. candle here? Now, I know there's many of you here in the room. You might be saying, well, William, why does it do that? The reason for this is because we have found that during the European trading session here, we have found that the European market, they're processing the largest bulk of the Forex transactions. The banks are processing their orders. This provides a huge injection of volume, and it provides this directional movement in the market here. So we're going to show you the strategy here, how we're going to take advantage of this directional movement. So here's what we're going to do. I'm going to back this up right now. Let me back this up here. We're going to start at the beginning of this week here. I'm actually going to walk you through the last couple trades this week on the Great British Pound Swiss franc. So here is, click on that right here. Here's the 3 o'clock a.m. Eastern Time candle on September 7th, and look at that directional movement right there. This was Monday. The market rallied up 136 pips. So right there, right out of the gate on Monday, if you were to go ahead and have a trailing stop going up, that was 136 pips. Well, let's bring this now to Tuesday. I'm going to show you a couple examples using this strategy. And once again, we're basing this off of the 3 o'clock a.m. Eastern Time candle. And let me zoom in here nice and tight for everybody. There we go. I'm going to zoom in here. Here is our 3 o'clock a.m. candle on September 8th. This is what, yesterday morning. So here is our strategy. Yeah, you might want to go ahead and start taking some notes here. Our strategy is going to be we're going to wait for the close of that 3 a.m. candle, and then what we're going to do is we're going to place two pending orders here. We're going to place an entry buy position 10 pips above this high. So we're going to come in here 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 right there. I'm going to type this out for everybody. Entry buy. Once again, it's just a pending order. It's going to go plus 10 pips above the high. Oops, above the high of that 3 o'clock a.m. candle here. So, yeah, Isaac's asking, are we talking about the wick? Yeah, this wick point right here, 10 pips above the high, entry buy position. Now, we're also going to place an entry sell position 5 pips below this low. So we're going to come in here. Let's see here. We got 1, 2, 3, 4 right about there. And we have an entry sell. Entry sell position. That's going to be minus 5 pips below the low. So let me move these out of the way. We already know this is our 3 a.m. candle. Let me zoom in here just a little bit more. There we go. So we have our entry sell and our entry buy. Entry buy 10 pips above the high. Entry sell 5 pips below. Both of these are simply pending orders until the market either rallies up and triggers our entry buy or pulls back and triggers our entry sell. So let's go ahead, let's see what happens here. 1 hour later, the market rallies up, triggers that entry buy. When it triggers that entry buy, this is now a market buy position, meaning that we are now in this market and we are buying. We're buying this market. We now believe the market's going to go upwards and to have a directional movement going upwards right here. Now, the first order of business once we trigger one of those positions is to come in here and cancel the opposite order. So we're going to come in here and cancel this entry sell because We're not looking to sell the market, we're looking to buy the market. So we cancel that. Now here's what we're going to do here. The next step is we're going to come in here and we're going to set a stop loss right there at the low of that 3 a.m. candle right here. In fact, let me change the color of this here. We'll make that red for our stop loss right there. There we go. Now, let me type this out here. It's going to be a little bit different when we're buying and selling. Stop loss when buying. Oops. It's going to equal at the low. Stop loss when buying is going to be right there at the low of that 3 a.m. candle right here. So far, once again, I apologize for going a little bit faster, but we triggered that entry buy, became a market buy. So we're buying into this market. We have our stop loss set right here at the low of the 3 a.m. candle. So here's what we're going to do. We're going to now figure out where our target's going to be. So let me pull this down here a little bit. Now in this case right here, we're buying into the market right there. Our stop loss is right here. So on this trade right here, we are risking 60 pips. We are risking 60 pips on this trade. Now our target, our trading strategy for our target, which is also going to be our limit, which is equal where we're going to take profit. There's going to be two strategies here. One, we're either going to go for a 1-to-1 risk ratio, meaning that in this case here, we're risking 60 pips, we're going to go after 60 pips. Or if we're not risking at least 50 pips, we're going to go after a minimum. Oops, number 2, a minimum of 50 pips. Because if you remember, that is the low end of the average daily trading range. We're expecting this market to move at least 50 pips. So by this case right here, we're risking 60. So we're going to be going after a 1-to-1 risk ratio. So we're going to go ahead, we're going to set our limit right here, 1.5049. Right there. So we're going after plus 60 pips right there. And once again, the reason for this is because we're risking 60 pips, so we're going to go after 60 pips here. So here's our strategy. Let's go ahead, let's see what happens here. 1 hour later, bam. 1 hour later, the market rallies up, hits our limit, and we just captured 60 pips on that trade right there. Congratulations, we're now out of that trade. We just made 60 pips. So for those of you who are trading a standard lot here, oh, that was in plus 60 pips in 1 hour. In 1 hour, we just captured 60 pips here. Now, for those of you who are trading a standard lot, you just generated $600 in profit in 1 hour. Now, how many of you would be okay with that? How many of you would be okay with that type of trading strategy right here? 1 hour later, you're out for the day, you just made $600 in profit. Yeah, Stephanie says yes, Harry does here. Now, Natasha says here, were there other conditions we have to look for? Natasha, perfect question here. Perfect question. What I'm showing you right here, this London breakout strategy, this is part of our live trading club program. In the actual live market, when you actually are trading live with our live professional analysts, you'll be getting into the market on certain days at 2 o'clock a.m. So you'll be in the market, and you'll have a professional analyst analyzing this market. And if you can see right here, everybody can see here the market was already going upward. So you have a professional analyst saying, hey, we're probably going to be looking to buy into this market. So we'll be able to analyze the market. So yeah, there's some other things you can look here. What I'm just simply teaching you is just simply just the trading strategy here. So hopefully, Natasha, that answers your question. So that was yesterday morning. That was on the pound Swiss franc at 3 o'clock a.m. Eastern time. Right there, bam. So that's one trade. Oops. Let's see if I can delete all this here. I'm going to delete all this here. Let's clean up our charts. One trade right there. Bam. Let's clean all this up here. And let's move this now quickly forward this to the next 3 a.m. candle here. So let's go ahead. Let's bring this up here. And I've already marked this here to save us some time. We'll bring this to the actual live market. I'm going to show you the trade from this morning, which is, oh, oops, right about, where's my 3 a.m.? 2 a.m., and there's my 3 a.m. right there. So here's our 3 o'clock a.m. Oops, that should be, this is from this morning. Apologize for that. I think, what's today? Is today, oh, it's the 9th. I apologize for that. I got ahead of myself here, so this is actually from this morning. Right there, 09. So right here. So here's our, yeah, I apologize for that. I was probably in a hurry as I was setting this up here. So here's our 3 o'clock a.m., just to confirm, September 9th, 3 o'clock a.m. This is from this morning. Now, once we wait for the close of that 3 a.m. candle, 2 pending orders. We're going to set an entry buy position 10 pips above this high. Right there. So there's my entry buy. And that's going to equal plus 10 pips above the high, just like that. Now we're going to set an entry sell position 5 pips below that low. Now, a couple of you have been asking why the difference. Well, that's one of the things in the actual live trading club. You can have a professional analyst walking you through, explaining to you why there's a difference with this. Let's go here. Why the difference between when you're buying and selling. So let's go ahead right there to start entry sell. Yeah, that's one of the things I apologize that, unfortunately, in 45 minutes, I don't have enough time to go over all the details here. I have enough time to kind of give you an overview of how this trading strategy works, but I encourage everybody to get into the live trading club because they'll be able to walk you through this, go into much greater detail. Let's see, minus 5 pips below the low. And once again, very affordable, $27. Those of you that get involved today, tomorrow you can get in for tomorrow here. Tomorrow morning doing this here. So let's go ahead and here's our entry buy 10 pips above, entry sell 10 pips below. Let's go ahead, let's see what happens here. 1 hour later, the market pulls back, triggers our entry sell, meaning that is now our market sell. We triggered that, we're now shorting this market. Now, the first order of business now is to come in here, cancel this opposite order. We're going to cancel that opposite order right there, bam. Now, here's something a little bit different here. Our next step is to set our stop loss up. When we're selling the market, our stop loss is going to go 5 pips above this high. So let's see here, 1, 2, 3, 4, 5 right there. Oops, let me delete that. I apologize. Once again, I apologize for having to rush through this here. Let's go here. We got stop loss. And this is when selling the market. When selling, it's going to go plus 5 pips above the high. Above the high of that 3 o'clock a.m. candle. So once again, there's our wick, 5 pips above. There's our stop loss. So we're in this market. We're shorting the market. We have our stop loss set right here. Let's see what our risk is on this trade. We are risking, on this trade, we are risking 53 pips. So that means we would be going after a minimum of 53 pips. So let's come in here, let's set our target at 53 pips. So right about, oops. So right about there, 14972. So right there. So our target, once again, our target is going to equal, once again, either a minimum of plus 50 pips, or in this case, or in the case of this trade right here, a 1-to-1 risk ratio. So in this trade right here, our target was, let me just correct that, I believe it was 53 pips. Or I'm sorry, our risk was 53. So we're going after 53. So our target's going to be plus 53 pips. Just like that. And you can see here, bam. Right here within the first hour, bam, the market does in fact pull back, triggers that. We're out of that trade. Less than an hour later, we just captured another 53 pips. So in that case right there, in 1 hour, you just captured another 53 pips. So with a standard lot position, that was another $530 in profit. Not too bad of a week. Would everyone agree that's not too bad of a week? We captured 53 pips on that trade. The previous morning 60. And I didn't even show you the one from Monday. If we back this up here, let's back this up here. Where's that one from Monday? I believe it was somewhere down here. There would have been probably another 50 plus pips or something right there. So not too bad. So how many of you would love to learn how to do this from a live professional analyst? How many of you would be able to do this here? Yeah. The Steve says, yeah. I guess, yeah. Let me answer Steve's question here. Sometimes these trades take a little bit longer here. Well, so far these were all winners here. You're not going to win everyone. But once again, in the live trading club, you're going to have a live professional analyst walking you through this. You're going to say, hey, it looks like this market's going up. Hey, it looks like this market's going down. We're going to look to short the market here. So that's the reason why you would get into the trading club here. So here's what we're going to do. I'm going to show you one more trade here. I'm actually going to show you one more here. Let's pull up we'll put the pound New Zealand dollar here. Let me show you the trade from last night on this one here. And once again, last couple trades here, the directional movement, up, down. Let me just zoom in here. This is the trade from last night. And just to walk you through here, we'll make this very easy. I'm not going to type everything out here. Let's see here, 5 pips below. So 4115, so that would be right there. 5 pips above. I'm sorry, 10 pips above. So right about there. There would have been my entry sell, my entry buy. Now let's see what happens here. Bam. We trigger that. We are risking on this trade. Oops, I'm sorry. Our stop loss will be right about there, 5 pips above. So we'd be risking on this trade about 99 pips, so we'd be going after 99. So let's see what happens here. Right about there, so 2.4013. So probably right about there, that would be our target. Watch what happens here. 1, 2, 3. 3 hours later, the market pulls back, and we would have captured on the pound New Zealand dollar this morning another 97 pips or so. So hopefully that you get an overview of this. Once again, I apologize. 45 minutes, not a lot of time to go over this in detail, but that's why we give you the live mentorship and trading club program. So how many of you feel it'd be worth it to enroll in this today and tomorrow morning be trading with a live professional in this exact same scenario here? Yeah, now Roger says, does this work for all currencies? In fact, Roger, you might want to write this down. This works for these 6 currency pairs here, the pound Australian dollar, pound Canadian dollar, pound New Zealand dollar, pound Japanese yen, pound US dollar, pound Swiss franc. Now, once again, I can't stress this enough. I just simply taught you the strategy. In the live trading club here, you're going to learn from a live professional analyst how to do this. Now, the next live trading session is tomorrow morning. So let me show you some of the results we've gotten here. Our live instructor here, Josh Martinez, he's going to be walking you through this here. He's had days where he's made $4,000 in a day, $8,000 in a day. There's been some days where using the same strategy, he's made $10,000 in 30 minutes here. In some of our live club sessions here, in one of our recent live club sessions here, let me pull this up here, April 6th, our students averaged between 120 and 140 pips in one of the live trading sessions. Another one here. Let me pull up another one here quickly here. This is from June 9th. Our students averaged between 90 and 130 pips. So I only have about 4 more minutes here. I see a lot of you asking, hey, how do we get into this here? So let me go ahead and let me bring this up here. Normally get into this live trading club, you would have to be a student of Market Traders Institute, and it would cost you $297 on a month-to-month basis. But as I stressed before, those of you that enroll today, it's only going to cost you $27 for the first 30 days, and we give you a complete money-back guarantee. So once again, I ask the question, how many of you feel it would be worth it to go ahead, register today, get into that live market trading session tomorrow morning, and then, you know what, if this is not for you, you can cancel and get all your money back. So we try to make this very affordable, make it very, very easy to understand. So here's what I'm going to do. I have about 3 minutes left. I'm going to send that link out to everybody here in the room. Go ahead, click on that link here. Let me pull up the link for everybody here. Let me explain to you how you go through it. And I'm going to explain everything you're going to get for the $27. When you pull up the link here, I'm sorry, this is taking a little bit, let me, oops. There we go. Let me send that out, or I sent the link out to everybody here. I'm sorry, this takes a little bit long to load here. But let me just quickly go over, as that's loading here, let me explain to what you're going to get for the $27. You're going to get 8 live trading sessions each and every month with a live professional analyst. So tomorrow morning, you have Joshua Martinez, one of our professional analysts. He's going to walk you through a live trading session where not only is he going to go over the lending trading session, you're going to learn different things such as the Frankfurt 2040 trading strategy, and he's going to teach you a plethora of different trading strategies during that time period. And once again, each and every week you're going to get these live trading sessions. Now, here's another special here. Something that's normally reserved for our students here. They pay thousands and thousands of dollars to get access to. We're going to give you special trading club access to our VIP Analyst on Demand service. Right here, well worth $27 right here. So here's the neat thing about this is that not only do you get these live trading sessions, but each and every day you can look at the analysis from our live professional analysts in our live Analyst on Demand room. We can go over that in much greater detail when you enroll here. So in one of our live Analyst on Demand sessions here, one of our students captured 207 pips overnight. So would it be worth it to pay $27 to get this information? You're going to get that as bonus number 1. Bonus number 2, Introduction to Currency Trading ebook. You're getting a $500 value of profit plan consultation call, 10 keys to successful forex trading ebook, market preview videos each week. Josh Martinez is going to send out his market preview videos each and every week to you. You're going to get recorded replays if you can't attend the live trading sessions. Now, I have about 1 more minute here. You get a full 30-day money-back guarantee. So would it be worth it to enroll today? Get into that live trading session. The live trading session tomorrow, Jones, is going to be, I think, at 7 o'clock a.m. Eastern Time. It varies each week. Sometimes they're at 2 o'clock, sometimes they're at 7. The one tomorrow is at 2. So go ahead, click on the link. I'm going to send that link out one more time. I see Rita send it out one more time here. I have about 30 more seconds here. Let me pull up. Let me show you here. Let me see here. For some reason, it's not loading. But when you click on the link here, it's going to show you how you can get everything here for $27. All of this, once again, full money-back guarantee. Type your information in, your payment information, you place your order, and bam, you'll probably receive a confirmation email alerting you to this. So once again, $27, well worth it. Full money back guarantee to look over the shoulder of a live professional analyst.